There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
Welcome, Auvorians, to the Saturday Software Strategy Session. My name is Steve Vetterl. I am the firm's CMA. Try to act in a responsible and risk-oriented fashion for the group. Try to keep everybody out of trouble, at least as much as I possibly can. But keep in mind, I can't keep you out of trouble if you don't actually watch the forecast. So spread the word, please. If there's any questions on this particular stream, you guys should be seeing my Twitter. Hit me up on Telegram. So, finished out a week of a rebound in equities as the war rages on in Ukraine. Unfortunately, I don't really see any end to this, but I am no expert on war or geopolitical politics. I can just observe and make comment on, but feel free to follow me. Not that active on Twitter, but I do occasionally retweet, maybe once or twice a week, some really good stuff related to just macro environments. You can go ahead and see some of the stuff I've talked about recently. This is a pretty good cognitive bias, what's called a codex, if you've never seen something like this before. It gets a bit deep, and essentially with any type of cognitive biases that I've posted multiple pictures on over the last, year and a half. I've sort of been at the helm here at Auvoria. It really is only done from a perspective of understanding that you're going down a path of quality behavior or bad behavior, right? And a bias is really just essentially something that you could be against, even though it may be helping you out. So this pertains, and this is real high level stuff from a trader coaching and mentoring standpoint. A lot of the best traders on this planet, regardless of what type of entity they work for, or in what capacity that they act in, they understand most of this stuff. They can see it coming. They can picture themselves going down a bad path. And if in fact that does plague any of our subscribers, as it does a huge chunk of people on this planet, being able to recognize it right up front and stop it is significant risk management from a perspective. So with our biases on the Forex Factory calendar, believing that this information is correct, let's take a look next week. Always make sure on a Saturday, as I often will make the mistake, move to the next week. Is the 26th. We start the week on the 27th. And here is our coming into. Now, next week, we have our quarter ending Q1 of 22. Okay. Not to say that there's going to be games as I shine a light on these two areas. Not to say but there can be more games played. I would say this is more the case in options land related to equities or some other stuff. But games get played here. So always be careful coming into any kind of witching or quarterly ending expiration period for a whole host of stuff. Right? Doesn't necessarily affect the currency markets to a large degree, but always be wary of any kind of quarter-ending games. So last week we had time shifts. The week before we had a time shift here in the US. It is spring forward fallback. So just keep in mind these calendars. Maybe I'll slide off. Just check that all your stuff is. I often will, with everything electronic I have, it just auto sets. But if you don't have it on auto set, make sure you check the time. So just looking at this, I don't really see. We have the employment non-farm payrolls is about the only thing that I see here that could trip anybody up. And typically it's the first Friday of every month. It releases the jobs numbers. This is not taking center stage. It's not to say that it can't impact anything, right? But quite frankly, what's taking center stage is obviously the issues with central banks being forced to tighten. And if you listen to my discussion, I think it was like a month ago, something like that. I talked about how central banks operate from a quantitative tightening standpoint to a quantitative easing. And it really is just the best way to sort of look at this is just if you have a circle of children and each child has a lap full of apples, okay? And this represents all the central banks and central bankers around the world. They're all sort of holding tons of assets that they've been essentially taking from the marketplace, right? And putting cash back in the marketplace. That's why there's a ton of cash floating around. Now we have begun to enter a cycle where a couple of the children start to put an apple up for sale in the center of the circle, right? Testing the waters, right? You can use a musical chairs analogy to sort of describe this from an opposite view. But the point is that if all the children were to throw their table and put everything on the market at the same time, you have an oversupply. Typically, from an economic standpoint, that has a tendency to reduce price, right? It can happen in the auto markets, which we're seeing the opposite of that happening. It can certainly happen in the real estate markets, and then in any other actively traded market around the planet. I don't care if it's some sort of commodity, equity, bond, anything in the credit markets for that matter, artwork, any kind of collectibles, NFTs, which I still think are just a ridiculous waste of money, but that's just my opinion. I don't know enough about it, and I certainly could be wrong on that comment going forward, but the key really is that concern of the marketplace in any currency is how fast all those children are going to put their apples on them in the center of the table, right? Just dumping bonds onto the marketplace, thus retracting capital, right? So picture all these children changing hands with money, and now their laps are all full of cash, and the center of the circle's full of apples. And that is probably a oversimplified analogy of how the marketplace works, but it's a good place to build a foundation from there going forward. If you want to take a deeper dive on that, you can jump on my Telegram channel, go up to the top of the channel, click on any of the pictures, and I've posted a sort of one sheet Forex cheat sheet, which is really just a sort of like a master class in macroeconomics on one sheet of paper. Everything from supply to demand to money supply to all that stuff. And I talk a lot about that because I still think the foundation of education starts from a macro point of view. My children have started to have these classes in school, and I think it's great that I don't know that it was taught that well in the past, depending on the school system. We certainly can use a lot of real world examples of that, to explain it. So, in any case, keep in mind for non-farm pay, it's the only real big deal I see as far as earnings next week. All right, on to the charts. So what I try and do with these charts is always look at them from a daily perspective, want to see them all in the aggregate. and then I want to see the actual chart itself. So rebound in equities, don't really need to get too much into that. Much bigger rebounds in some equities than others. Surprisingly enough, a big rally in equities in Japan. I mean, this is almost a face ripper here. Backing off in energy and then a rally back, right? I've talked exhaustively about why all these things exist. I've been focusing most of my time recently on these charts here, okay? And these are the prices of the credit markets, right? Now, the credit markets comprise much greater than just 4 charts on 4 different types of terms of bonds with different durations, right? But what it's illustrating is that the price of bonds are going down, the yields are going up, right? And this is tied to the change in actions that has been anticipated by the marketplace. And keep in mind, each of these charts is almost like just the first quarter of this year's look only, right? But they are looking at a marketplace where more than likely a lot of apples are going to be put in the circle, and the price of those apples are going down, and thus the yield on bonds are going up, causing volatility in the currency markets. I mean, especially the yen. I mean, if anything has truly been off a cliff in relation to the dollar, it's been the yen. It's very easy to see this when you're looking at these profiles from a visualization perspective that FinViz provides us. This dashboard shows you the price of everything, you know, and look at the ridiculous inflation in cotton price to a certain degree. And obviously we know how, you know, the price of precious metals, which it continues, especially in gold, it continues to amaze me that anytime we get even close, and you really got to see this on like a monthly chart, anytime we get close to new highs, they'll just come and get it. I mean, it's almost like there's just a whole bunch of sellers just hanging out up there, just waiting to unload chunks at higher prices. Because from a weekly chart perspective, which is this, it was a rejection. Now, a lot of say, well, maybe that's a double top. It's possible. All this tells me is this was a rejection reverse, and that we've got to spend more time inside the balance area, our base, or auctioning, if you will, more in this particular area in order to possibly break out. Ultimately, a true meltdown, not in Ukraine, but a true meltdown situation in this country in a whole host of areas, housing, stocks, commodities, right? And more of a deflationary is going to bring the price of most precious metals, led by gold, up through the roof, which in my opinion, for those that are very overweight in gold, I've met many potential clients that are super overweighted in gold. You know, I find the more they're overweighted in gold, the more of a crackpot they are, right? So I try to explain the risks of being too heavy in one asset class, because this certainly could see lower prices, albeit right now, I don't think so. It's going to see higher prices depending on how bad anything gets in terms of our bubbleiciousness of demand of damn near almost everything on this planet. So that is my cognitive biased opinion of what's going on globally. But jump back to the charts here, get back down to credit markets. You know, this doesn't bode well for anybody who wants to buy a house, right? Mortgage rates are going up. And people would say, well, why wouldn't mortgage rates be going down? Because it's the opposite, it's the inverse. It's completely uncorrelated to the current price. It's an inversely correlated, meaning that as price goes down, yield goes up, right? Interest rate that you pay. All right, let's jump over to the dollar. Not much change. Scission. Hey, that's a new word. Not much has changed since some of my chat, albeit it is looking kind of flag-like. Can't say it's going to bust out one way or the other, because the tailwinds of these movements are totally at the hands of what's going on from our this Russian situation. It's really at the bottom line. There's no way to tell what's going to go one way or the other. Although I must say we're riding a nice trend line higher if in fact the shorts are, and you could look at the opposite as on the Euro chart, right? The longs are sort of hanging down here, loading up. We could have another blast through and what they like to clean house, typically, which was certainly right here. I call it clearing the queue, where the markets will just rip from one end to the other and just completely clear the queue of anything that was sitting out there in stop land. It's a much more pure and uncloudy way to trade, and I prefer that. So the trading inside here becomes more clear because you've cleared the queue. And then at the same time, anytime you have a move, and this is just a daily chart, but anytime you have a move into an area that we haven't seen in some time, this chart can look like this on the upside or down. Doesn't really matter. The key is that it broke, and that took with it a vicious move, which is a queue clearing move of any stops and maybe sitting down there. But the first slingshot back up, it's one of the lowest tricks, one of the lowest risk trend trades that exists. Okay, meaning it has a high win rate. It's a chance it'll work this short. Now this is a daily chart, right? The more of these patterns take place on a higher time frame, typically the more solid or, I don't know, statistically significant these patterns are as far as winning. So just keep that in mind as you may or may not be new to the education of candlestick charting. There's been a bazillion books written on it. There's tons of websites out there, and I have stuff posted also in the Telegram room on that. Let's take a look at the pound. It's looking like the center line I'm holding up in the center of my crosshairs, this whole 3170-ish area. Seems to be somewhat magnetized to this area, probably will stay so, barring any major move. Let's take a look also at, I don't know if I showed CAD recently, but I did want to show this to you guys because we're back at some pretty serious support. So it's interesting that, at least from the dollar's perspective with the Canadian dollar, we're back to some, pretty significant low levels that have held for this whole year, right? Maybe even further back, obviously, back to November when we broke, but we held this area. We're moving into it, but yet the dollar is still strong in relation to other stuff. I find that almost like they've dislodged from each other, right? In relation to other currencies. It's like the exact opposite with the yen, Strange times we live in. Yeah, same thing. I mean, the other currencies have been strong, especially these natural resource loaded countries like Australia and Canada in relation to the dollar, right? Could that be a pin action move off of gold strength, right? There's a new one for you. Euro GBP still long term inside a range. Nothing too exciting going on there. Now, I have noted this more than a few times because we're actually going to need to move to a weekly chart to see this. And let's do a little reset here, make it easier to understand, and then expand out. This is the NEO currency for those that do not know. Came down, held, crashed through it, came back. See this slingshot right here? See how effective this was? I hope the NEO algo system was short here because this would have played very, very nicely. More of a, I don't know, an entire weekly swing play, if you will, right? You could have stayed short that. So if that's not the easiest to see, let me expand this out a little. If you have an area and you don't necessarily pay attention to this 67.25-ish area, but to this area, because this is where almost like the center line of all of those previous wicks, if you look back, right, you see through periods of time we're somewhere in here. This is a very low risk trade. You could have actually taken this trade somewhere in here as this snapped back into a first, this is a weekly chart, keep in mind, snap back to its first crack at a weekly trend down, right? These aren't one time framing lower candles, but they are lower highs, lower lows each week breaking through. You'll usually have a snapback of something like that. And from a swing trader's perspective, this can be an area, literally this whole area, if you have the stomach, to sort of load up in multiple pips, multiple hundreds of pips ranges in here. This is how an institution will take a position on this, and they'll hold it until it exhausts itself, which it certainly look like, at least from a short-term perspective, it may coming into next week. So, not a bad trade from a swing perspective. I mean, anything versus the ends. GPP NZD, haven't shown this one in a while. Spot price of gold, talked a little about that in the FinViz discussion. Good place to take some off the table. Note these Bollinger Band touches, especially on weekly charts, have been very effective reversal points. It's this upper green line here shades the entire area as the range of expansion, if you will, and the outer bands are typically overreactions or extreme outs that can be taken. One of the few times that I talk a lot about stepping in front of the train, but you have to be willing to hold. Let's see. I need to get into the oil. All this does is just piss everybody off because they got to spend more money at the pump. Let's take a look at. I tell you, just keep in mind, guys, it's just been one spectacular fall from grace. This whole Chinese tech stock and transactional based group, you could even throw in electric vehicle makers as well. I mean, they've all just been clocked, including Baba, which is one of the strongest on the planet for a long time. Look at the long-term chart on Baba. This thing is a value stock now. It's crazy. You know, you have all your, I mean, this thing's almost a buy, but just get 10x worse in this arena. You know, you're looking at once was one of the strongest stocks on the planet. It's just taking a bath, and we're damn near back to pre-IPO or post-IPO prices, at least in it's just, yeah. I use this chart as a great example of all the naysayers out there, like, you know, Alibaba can't go below 200. It's a raging buy. I heard a bunch of heads squawking. Some punk I saw on CNBC is in charge of some sort of fund. He's like, no, we're loading up at $200 a share, and it's going lower, and you know, just not paying attention to just ridiculous amount of headwinds from all kinds of perspectives going on in China. I mean, this is just a great example of distributions, just institutions unloading the position. Take a look at the coinage. Drop this back to daily. Still seems like it wants to break higher. Just the volumes have just been lower. It's almost like there's no love for the sector, but yet if there was truly no love, there's enough love keeping it supported. Does look like it wants to break higher though. This actually looks like a sloppy version of a cup with handle. Not the best basing pattern as, but you can kind of get the idea that it's spent enough time, moving back and forth, auctioning, if you will, from about 37 a coin all the way up to about 40, auctioning and balancing out, trending sideways, whatever you wish to call it. At some point, you'll form a decent enough pattern. You'll have an increase in volume, and then you can break out. And believe it or not, those are the points where you want to buy. It's counterintuitive to what you think. You'd say, well, why wouldn't you just want to buy down here? Well, that is certainly a low, and from at least the recent moves, you're getting it considerably off its high, more than half at this point. So from a buy low perspective, it seems like a good trade, but the problem with this is that statistically it hasn't put any period in, so you haven't really had a demonstration, if you will, that buyers aren't really looking to take this much lower at this point, right? You're thinking, oh, well, hell, we probably get a rally, and they're going to jump back on and just short it again. You just don't know. But if it puts in a decent enough pattern, which isn't really the best example of, but you guys could look up cup with handle patterns on, just Google them. There are all kinds of patterns out there, but the cup with handle on increasing volume is the most significant. It is the most recognized by all kinds of screening systems as the breakout. Also is the lowest risk. And it basically just means like everybody's done selling for purposes of discussion, right? Not everybody's done, or there wouldn't be a market, right? But everybody's mostly done selling, and there's possible accumulation beginning to take place from whatever large institutions or whales in this particular market. That's the coattails you want to ride. So I think I'm going to post, I know the Macro Compass guys have been talking a lot about these guys recently. We've got an institutional subscription with them. They're actually one of the best. I'll post some stuff of theirs on Telegram, but wish everybody a great Saturday. Spread the word of risk management. I hear it's parties. Not just kidding. Everybody's gonna look like you're full of craziness. So, but actually, here's a great example of that. So, seems like I've been saying this for a whole damn quarter. I want to change the time of this on Saturday. Okay. What I'll probably do is I'm still okay with. Let me just jump back to the Tuesdays. I'm still okay having this at 1 p.m. This actually because I live on the East Coast now in Florida. But this just is really getting in the way. And honestly, I think most people watch the forecast via the rebroadcast anyway, or just the recordings that are up on Vimeo on our YouTube channels. So I don't know that it matters, but yeah, you never know. So if you have any questions or concerns on that, you can sort of hit me up. Maybe we can figure out what times want to be good. So with that in mind, everybody, I wish you a great weekend, and may the trades be.
There is a substantial risk of loss associated with trading Forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.